Management accounting was called cost accounting until like last 30, 35 years. The cost accounting was the word. I actually learned cost accounting. I'm so old. I didn't learn management accounting. Cost accounting was the word they used to use. And now it has become management accounting. And why? Because accountants are becoming more and more managers now. So their input is a lot in decision making. So now they call it management accounting. But the cost is the main thing. And it does make sense. The basic is that management is responsible to keep the cost as low as possible. So that was the term. So to keep the cost low as possible, or control it, I normally give them an example that if you want to control something, you need to understand that thing first. For example, if you want to control your kids, try to understand what they need or how they could be controlled, and then it's possible. Same applies to your boyfriend and girlfriends, or husband and wife, whatever case you have. But yes, understanding something is the key. So that's what our aim is. So let's look at the cost, try to understand it, and then decide how it could be controlled. By element, there are three: material, labor, and expenses. So if you look at any product, you could identify two things very easily. Material, so let's take the example of this table. Material is there, and somebody made it. Even though if it's an automated, all robotic production, still there will be people involved, and so labor is there as well. And then expenses are obvious. If you only look a little bit deeper, you need a place to build these tables. You need machines to build these tables. You need to pay expenses and so many others. So these are the three elements of the cost. Then by function, we spend money in a company on either a production or a non-production. So if we are a manufacturing company, we would spend money on producing goods, and then we would spend money on other activity, which is selling, distribution, and financing, admin. So these are the other activities are called non-production activities. So these are the two functions of any business. Then nature is cost. Now this is more complicated, so we'll discuss more in detail. First one is direct cost and indirect cost. Coming back, and then behavior-wise is fixed, stepped, fixed, variable, or semi-variable. What is behavior? So if we make a decision, any decision, how that cost is going to behave is very important thing to know before we make the decision. So this behavior is normally how it reacts to a decision, or normally that decision is going to be increase or decrease in an activity. So if you're selling 100, what would happen if you start selling 1,000? Or if you start selling only 50? So that's how. And we will look at these bits by bits. Okay. So first of all, production cost. Here we will divide these into five different areas. There are two major areas. One is direct cost. In there you can see direct cost, and then you can see overheads. So three are direct cost and two are overheads. So first of all, direct material. A direct material is the core material of any product. So if you look at this table, that table is too complicated. So let's look at this table. Keep things simple. We have wood and we have aluminium. These are the two major material in there. Is there any other material in this product? There's some material which is core. Wood and aluminium is the core material. I can easily get the cost of this wood by meter squares. Easy peasy, very simple. And because it's core, it's needed. Cost of aluminium by length, not that difficult. So the price. So a core material which can easily be identified and the cost can be easily calculated. So that is the core material to this. One of the quality of the information is that it would cost you less than it would save you. Otherwise, that information is useless if it doesn't save you any money. So it needs So this piece of information, maybe it would be too much of hassle to do than saving the money. So I wouldn't bother trying to work out how much paint I used or how much it cost us to use those screws on this table. Not worth. So the material which is direct, that is core. Direct material is core, and the other material is indirect material. Yeah, direct material and indirect material. So that is the nature. So if I want to add up the cost of this, yeah, I can add, let's say, £5 was on the wood and £10 was on the aluminium. So that's my direct material. I'll assess labor. Now we are on direct labor. I would assess how long it took labor to manufacture this. Half an hour, we pay £15 an hour, so £7.50. 5 for the wood, 10 for the aluminium, £7.50 for the labor, £22.50 is the direct cost. If we add direct labor and direct material, that would be the direct cost of production of this table. I'm not worried about that. What I would do about the indirect labor and indirect. Now, what is indirect labor? Direct labor is the one which actually physically involved in production. So all the people working on a factory, working on the products are direct labor. All the teachers, us lot, are direct labor for this course. But there are people who are working in the university so that we can do these courses. Cleaners, security people, admin people, our vice chancellor. These are the people are there to manage this. Although they're not part of the main function of the business, they're still needed. The cost of those people is indirect labor. In a factory, a watchman, a foreman, watchman also, but a foreman on the line who manages the people working on the factory is not a direct labor, is an indirect labor. A watchman on the gate, security people on the gate of the factory, they're indirect labor. The cleaner who come after the shift and clean the place are indirect labor. That the cost would not go on the table directly, but what we would do, we would add up all of those costs, watchman salaries and cleaner salaries and VC salary and admin staff, admission staff, finance staff in the university. We would add up all of those costs. And then what we would do, we will add up all of the products we produce, tables, chairs, and everything. And then we will allocate, we will divide and see how much goes to one table. So maybe £5 for all of the extra paint, all of the watchman salaries, cleaners salaries, rent of the place, rates of the place, taxes, and so on. If we divide everything, maybe £5 would go more on the table. So $22.50 plus $5, $27.50. That is the total cost of producing this table. That £5 is just a guess. That is very random, not random figure, but it's an average figure, which could be correct and which may not be correct. The chances are 99.9% it would be incorrect. We can't do that, unfortunately. Finding out the exact cost of a product is very expensive. We will talk about more later on. There is a possibility, but the cost would outweigh the benefits, so we wouldn't do that. But still, there are parts where we actually talk about this a bit more. So direct labor, direct material, variable production. So then direct expenses is a third area. Now that is a very unique thing, and you don't see this very often in any business. Direct expenses are rare. Why rare? Direct expenses are anything other than material and labor, and what it could be, this could be cost of a machine. Now why it is rare? Because think about a Lucozade factory. They have all their machines producing everything for them. Most of that is automated. Very little human involvement. Because those machines are there for all of the products. They cannot be direct. Remember, the direct cost, which can be identified easily identified with one unit of production. All those factories, let's take the example of this room. Can I directly identify the cost of using this room with this lecture? It is possible, but it's going to be very time consuming. So it's not easily identifiable. Yeah. So the examples I give you for direct expenses. So let's say I want to have a pool at the back in back garden in my house. Yeah. Swimming pool. And I hire a specialist firm who do this on daily basis. This is their job. So they have all the people, expert people, they have all the material, and they have all the machinery which is needed to digging and making the pool. That's their normal job, daily basis. They would not have any direct expenses other than labor and material. The machine they use all the time. So that is indirect expense. But let's say my neighbor hires a handyman who doesn't build pools all the time. So his wages would be direct labor. Material he would use would be direct material. And then he needs some machinery which he doesn't have. So he goes to a machine hire company, DHS or whatever they are. There's so many now. And he hires a machine which would cost him £500 for the whole project. That £500 now is direct, because those £500 could be directly attributable to that swimming pool. So this is one example, but think about Elon Musk, for example. He's building tunnels underneath some US countries, and for that they actually built a specific machine. The cost of building that machine could be associated with building those tunnels. So in that case, the cost of that machine would be direct. But normally, the cost of machines is indirect. So direct expenses are normally very rare. Okay, very, very rare. So let's say I give you last example, and then I move on from there. We do a course. And we get really good numbers for that course. Yeah, we have teachers as well, but we don't have any space in the university because of this situation. So what we do, we hire a hotel room just for that course, and we pay some money. So the rent of that room in that case would be direct expense for that course. Otherwise, this cost of this room is not direct. Okay, it's indirect. Bit complicated area, but you would rarely see this bit. So then we move on to variable production overheads. Electricity is a variable production overhead. Yes, the more machine we use, the more expenses. Overheads are indirect expenses. Indirect expenses equal overheads. Exactly the same meaning. Okay. So all of the indirect labor, all of the indirect material, these are all overheads. Some are fixed. Fixed mean they would not change no matter what decision you make. And variable mean they would change if you make a decision. So if we start teaching more, we will use more electricity. If we start producing more, we will use more electricity and more material and so on. So these are our variable and fixed. A bit more is coming to make it more clear. Non-production costs. I have mentioned these before. If you're a manufacturing business, you need a head office admin. You don't produce anything, but they manage suppliers, customers, and so on. That is administration cost. So in university, admission and finance and library, these are administrative people. I mean, library maybe not, but finance and admissions are definitely our admin staff. Selling costs, so marketing costs, for example, advertisement, your sales rep, the people who go from shop to shop, from business to business to sell your products. These are your selling costs. Are billboards and TV ads. These are your marketing costs. Same thing, marketing. Distribution costs, for example, if you travel on the motorways, you would have seen some really big warehouses for Sainsbury, Morrison's, or DHL. These are their big distribution centers. All of the material comes, all of the products come to them first, and then they distribute their shops across our supermarkets across the UK. The cost of running that warehouse is a distribution cost. Delivery cost, all of the drivers who deliver, those costs are distribution cost. And a very unique cost is finance cost. Almost every single business uses loans to run, and that cost is finance. It's not a production finance cost. One thing you should remember from here is finance and interest cost. How the question could come, we would give you an item of cost, and we would say, we will give you 4 options: admin, distribution, marketing, selling, and finance. And you'll have to pick the right one. Sometimes it will be easy, sometimes not so easy. Most of the time it will be easy, don't worry. So direct cost and indirect cost, which can be directly identified with a specific unit or cost center. If we add up all of the 3 costs, direct material, direct labor, and direct expenses, we call it a prime cost. All direct costs together. Indirect costs, which cannot be directly identified, are indirect material, indirect labor, and indirect expenses. There are lots of indirect expenses, hundreds and hundreds of them. Even in this university, if you look, there's so many. And these are all called overheads. Okay? Okay, so that's by nature, and now that's by behavior. So if you make a decision, a cost is going to react or not react. If it reacts, it's variable, and if it doesn't, then it's fixed. So first type of the cost is fixed cost here. And you have 2 graphs right on top over there. The first graph, it shows, let's take an example of a fixed cost. Rent is a very common fixed cost in our examples. So what is our x-axis has our level of activity, and that is our total cost of rent. Okay. So level of activity at this point is 0. In the middle is 5,000. And at the end is 10,000 units. 10,000 units or 10,000 patients or 10,000 students, whatever you want to call it. The rent would remain the same. You see, if we have a campus which is on rent, it's going to remain the same. So that's the example of rent. Rates are normally same. So we are paying some rates for this university. If we teach, we pay the same. If we don't teach, we pay the same. Fixed cost, yeah. Our VC, yeah, university closed, or even myself, I'm on a fixed pay. If I teach because the university is open, or if I don't teach because the university is closed, my pay is the same. So my cost is fixed, it's not variable. Okay, I am a direct cost. Remember from the previous slide, I am a direct cost, but I'm a fixed cost. I won't change. So that's this slide. Now this one is interesting. Rent, cost of rent. So let's say we have a factory, we produce 10,000 units in that factory, and our rent is 10,000. Okay, that means rent is £1 per unit. Yeah, if we divide it, 10,000 pounds rent divided by 10,000 production, £1 per unit. But if we produce 100,000 units, our rent would be down to 10 pence per unit. So that slide, that is the point which gives us 10 per unit, and the more we produce, our cost per unit is going to go down. So that's a fixed cost. One thing which should be remembered, that all fixed costs are only fixed in the short or medium term. Long term, everything changes. Rent could change, rates could change, my pay would change, hopefully. A step fixed cost. Some costs would jump and then stay the same for some time, and then would jump again and then stay the same for some time. Example, this graph, we have one shop, and on one shop we can only sell up to 5 million annually. Yeah, we want to increase our sales. So this is my sales, and that's my cost. Yeah, up to 1 million or 5 million. What did I say? 1 million. Let's keep it 1 million. My rent for one shop is £50,000. Yeah. Then I get another shop, and my rent goes up to 100,000, but my sales goes to 2 million. So from 1 million and £1 till 2 million, my cost is same. My activity, if it's 1 million and 1 million and 10, 1 million of 10,000 or 2 million, between that range, my cost would be the same. Then we have a variable cost. Okay, variable. A most common cost, variable cost, is material and labor. We've produced one table, we pay £5 for material. We produce two tables, we pay £10 for, because 5 times 2 is 10. Okay. The cost per unit, so that's what it says. Yeah. The cost per unit is £5. This is £5. We produce 1 unit is 5. We produce 10,000, 5 million, 10 million. That cost is same. It doesn't change price. For the cost to be variable, the percentage change in the cost should be equal to the percentage change in activity. The cost on material on one table is £5. Second, it would be 100%. Yeah. So if you make another table, the cost will be £10. That is 100% change in cost. And first we produce one table. Now we have two tables. That is 100% change. So the proportion is same. The easy way to say it is a cost is only variable if cost per unit remains the same no matter how much you produce. Okay, that's the easy way. The more complicated way is proportion and blah, blah, blah. A cost where this is not the case, it changes, but the percentage change in the cost is not as the same as the percentage change in activity. It will be called a semi-variable and semi-fixed cost. Normally, a semi-variable cost is the one which is a mixture of fixed cost and variable cost. So if you look at the labor cost for this university, is all mixed. Total labor cost. It has some fixed element. There are some ALs. There are some fixed lectures. Cost is mixed. If you look at a total payroll of a factory, it would have some variable, some semi-variable. Yeah. And it's important to differentiate between this cost. When you look at a semi-variable cost or semi-fixed cost, you need to segregate variable from fixed, and then you can make a decision on that basis. To start with, where it's helpful, and obviously we'll see where it is helpful. If you produce, you're a manager, yeah, you produce 10,000 units in January, and now you're looking at 15,000 units in February. What type of information are you going to need to actually achieve that target? How many people we need, and how much we are going to spend on our costs. Yeah. So if we can do this, if we can read the cost properly, we can actually work that out, and that's what we are going to do next. That's our next task. Okay.